Russell Smith here with the Dream. Good. Hello, everybody. Russell Smith with the Dream Team and Alcova Mortgage, and we're going to talk on our series number 3 of unlocking VA loan success. This is a Dream Team webinar series, and we're just talking about all kinds of some misconceptions, some just unknown or rarely known things that are just benefits of VA loans, and really just creating success from it, because it's just an awesome loan. It's best loan in America, in my opinion. So today we're talking about VA benefits, and that's understanding some of these little known benefits that many can experience and can really take advantage of in a good way, and using actual VA guidelines, whether they're out and open, and easy to tell, or some of them is just you just got to talk to VA about. But anyway, these are experiences we've had, and we want to share them with you. So today we're going to talk about Purple Heart recipients and disabled veterans, the benefit that they can have with a VA loan, a qualified surviving spouse, getting a VA benefit after the closing potentially, Streamline refinances, and this is even on a rental property. This is huge, and I talked about that, I believe, the very first week, about VA eligible buyers that are looking to be an investor. So we'll talk about that. A new thing that is with the new laws that came in place about buyer's agency, VA came out with a temporary guideline in reference to veterans paying this buyer's agency fee. We're going to discuss that. And then our simplified lending process. It's a reduced documentation for someone that is using a VA loan. So let's dive right in. Purple Heart recipients and disabled veterans. First of all branches of the military are eligible. And the biggest benefit for a Purple Heart recipient, and that started, this guideline started in 2020. But if you're a Purple Heart recipient and you are considered 10% or more disabled, then you can be exempt from the VA funding fee. And so disability rating means, like, if someone is a military veteran and they are considered 10% or more disabled by VA, then they can be actually exempt from this funding fee. And that can be anywhere from 1.25% of the loan amount up to 3.3%, depending on their down payment amount, if applicable, and if it's their first time or subsequent use. For instance, like a $300,000 loan, it could be $9,900 roughly that someone could save. So that's a big benefit. And then pre-discharge disabilities. It could be that someone is in the military and they're not receiving VA disability income, but they actually could have a disability that could help them qualify for this exemption. It's rare, but it happens sometimes. And so anyway, that disability is really huge. So big benefit, and that's not even counting the potential property tax benefits, where some states you can be exempt from the property taxes, or at least have a reduction in the amount of property taxes. Qualified surviving spouse could qualify for a VA loan, and so it's very specific for the most part. But on a qualified surviving spouse, it needs to be one of the following to be true: either the veteran is missing, be a prisoner of war. That's I can't recall any time in a long time either of those being the case, but you never know. Or died while in service, or from service-connected disability and didn't remarry. And then there's some little guidelines here: didn't remarry before 57 years old or before December 16, 2003. And then another case is a vet that's totally disabled, died, but disability may not have been the cause. That is certain situations. Now, often a spouse may not have, gone through the process of getting their eligibility in their name, and that's okay. All you got to do is contact us, and we'll help with, getting the form completed, and then my processor can submit that to VA, And but we can walk someone through that process, and it's pretty simple once the form is completed, and it takes a short amount of time. So that's something that many are not aware of, and again, it's just amazing tool and access to a wonderful program, and often because of that disability um, of the veteran that's deceased, then the qualified surviving spouse is often exempt from that VA funding fee as well. So again, great opportunity there. VA benefit after closing. We actually have a scenario where this is probably going to happen, but we're not sure if it's going to happen right before closing or right after. But it's possible to have your VA funding fee refunded after closing. So, and I say on here the effective date's key. So, for instance, someone may be looking at they're buying a house right now, in the process, getting ready to be, maybe even coming up on closing, and they're in the process of getting their VA disability benefits, and but they're not sure if it's going to meet that closing. They're like, man, I want to save that $9,900 or whatever it may be. And so in that case, then um, it's okay. I mean, it'd be nice if it's beforehand. But let's say they close, and then bam, a week later or something like that, they get the notification that they are now receiving that VA disability. It's been awarded, and they are now exempt from the VA funding fee. But hey, I just closed. So how it works is if they paid cash at closing, which most do not, then the VA will pay the veteran directly cash for that amount. But the typical is it's financed on top of the loan. So in that case, again, once that's proven and the veteran's going through the process, then the lender will go through the process to get that refund back to the loan balance. And we'll coordinate with VA on that. And for a veteran that's looking to, use this benefit here, they can just start the process by calling that 800 number, which is direct to VA. So again, that's a wonderful benefit there. Streamline refinance. It's been a few years since this has been an option when rates are going up, but actually rates have been coming down a lot lately. So many that have closed with 6s or 7s interest rates can benefit from a streamline refinance, or otherwise called a VA IRRL or IRR if I said 3 R's. Interest rate refinance rate reduction. I'm saying that wrong, but anyway, it's a very easy process. I mean, we can close in a couple of weeks. It's besides an application, copy the mortgage statement, homeowners insurance. We look up the property taxes and figure all that out to see what kind of benefit is there. One, how much of a rate reduction, how much of a payment reduction, maybe going from an adjustable rate to a fixed rate, and then comparing, okay, what are the closing costs, the cost compared to the savings? Does it make sense? VA has their rules, but we also want to make sure that it makes sense for the client and not just meet minimum standards. Funding fee or no funding fee. If someone is exempt, like we talked about earlier, there's no funding fee for a VA streamline refinance. So there's nothing added on top of the loan. If someone is not exempt from the VA funding fee, instead of it being 1.25% to 3.3% of the loan amount, is 0.5%. And it is allowed to be added on top, or the client can pay for it out of pocket. Closing costs, they are typically rolled into the loan. A common misconception on purchases, I say every time someone's using VA for the first time, and that is it is not automatically rolled into a VA loan on a purchase. But again, it is most of the time allowed to be included in the loan on a streamline refinance. No appraisals needed, but sometimes there are, some automated valuation methods or things like that, and other times there's not even anything needed. And again, that's something we'll figure out. And when I say closing costs are included, this also includes setting up escrows, because a new escrow account will be set up. And how often is it used, or can it be used? This is a very popular question right now. There's people that have refinanced right now, they're going ahead and taking their savings now. Yes, there is the potential that rates may go down even further, and they don't want to take their one-time opportunity to refinance. So what we'll do is I'll explain that to someone, and it's whether it's a purchase or refinance, once you've closed, then you have the VA rule takes over again, and that is you have to have made at least 6 on-time monthly payments. And then after that, it needs to be at least 210 days. The closing needs to be at least 210 days past the first payment due date. So as long as you've met that, and again, there's enough benefit for the client, then it can be done over and over again. And then rental properties eligible. Again, to my knowledge, there's no other loan that will do such a thing, and that's a streamlined refinance, no appraisal, include all the cost on a rental property or second home, and give primary residence interest rates. That's huge. So if someone has they bought a home with a VA loan, they've lived there a while, and now they're renting it out or using a second home or something. And normally, oh my gosh, I got to go refinance to a conventional loan, investment property rates and all that, get an appraisal, the whole works. Nope. You can do a streamline refinance on a rental property using primary residence rates. That's huge. So if you closed at 6.5 before and then rates go to say 5% or something like that, you can get that primary residence rate. So that is huge. Great for people that turn properties into investment. That increases the cash flow because the payment goes down. So super awesome. Buyer's agent commission. So this was big news because of lawsuits and everything. So it became there became new rules about when and how a seller can pay a buyer's agent commission. Again, it happens most of the time still, but VA before August the 10th would not allow a veteran to pay a buyer's agent fee. Flat out would not allow it, and among other things. But as of August the 10th, they came out with a temporary policy that states that the veteran may pay their buyer's agency fee as long as it's reasonable and customary. And that's typically up to a 3% fee. So that's big. It's just, and they came out with this because all the other agencies had this, clarification in their guidelines that, hey, the buyer can pay it. That's fine. VA was restricting, and so it was putting veterans at a disadvantage. So if they wanted to buy property X and the seller wasn't paying any fees, and I want that house, VA says, nope, sorry, you cannot pay that buyer's agency fee. So it did put them to a big disadvantage, and now that is fixed. And it's going to be, they said in the coming months, they will come out with a permanent guidance on this. I would assume it will be the same, but they may have some tweaks to it, and you never know. Maybe they might come out with something that's an improvement on it. But as I said before, often the seller is still paying it, and the seller is allowed to pay for that buyer's agency commission. And I put in much more. And when I say in much more, I again go back to any of our other presentations or ask about it. A seller is allowed on a VA loan to pay all customary closing costs, which is awesome, plus 4% sales concessions, which includes prepaids, which includes buying a golf cart. It includes appliances, paying off debt, paying off collections. It can be buying out a lease early. There's a lot of things. It's not as common these days. In multiple offers, you're probably not going to get that. But in some properties, and a seller that's willing to give a larger concession, that's a beautiful thing. So keep that in mind. And then here at Alcova, we have a simplified VA lending process, meaning we don't like to add a whole bunch of extra things just because we want to add it to it or whatever. So when it's someone's an active duty military, we're going to really, for their income, is just give us the LES. So that's very simple. We don't need W-2s and things like that. Really only need that if there's something unusual, maybe different other types of income, things like that. Retirement and disability, often we can use the certificate of eligibility, which we order anyway for disability income. But if it's not updated and that extra income is needed, then we can get the little letter, which is very easy for a veteran to get. Same thing with the retirement, proof of the retirement that they're receiving. Very simple. And bank statements. We have an automated system where the client can enter in their information, and it basically links or syncs us up to the bank statements, and we just pull that in to our system. Very easy. Client doesn't even have to give us a bank statement. If that doesn't work or chooses not to do that, the most recent monthly bank statement, all pages. So that's again very simple. Also, a power of attorney, very common with someone's in the military or even veterans. And we often will, as long as the language is correct in there, we can use a military power of attorney. So the big thing is to make sure if you're considering using a power of attorney, make sure you mention as soon as you know that. Early in the process is best because there is a little process to go through to approve it. And or if there's not one in place or it's not acceptable, we've got to get a specific power of attorney prepared by the closing attorney and then reviewed, approved, signed, notarized, etc. So we want to make sure that's early in the process, but those are allowed and can certainly help in a closing. And then save your signature hand in your arm. What I mean by that is most of our closings are hybrid closings, meaning that the morning of the closing, a good part of our closing package is going to be emailed for e-signatures. So instead of a big old thick package, it's, most of that is taken away and it's going to be e-signed. The client also, even before that, receives a copy of the whole package. So they know ahead of time what they're going to be signing. And then at the actual closing with the closing attorney or title company, that's when they're going to sign the remaining documents, which are pretty much the notary documents. So again, just a whole lot less signing, much quicker closing, just a whole lot easier. So again, we're all about making the process very efficient and as easy as possible. So a big thing, and I share a lot of this with realtors because, they're in the front lines talking to clients and trying to figure out, what they can buy. And of course, they'll send them over to us for the qualification. But still, you need to be the expert as a realtor. And I'm going to say this in every single one of our presentations, but, be able to educate, communicate, and be that resource. Know enough. You don't have to know all the mortgage guidelines, but know enough to be able to talk about potential benefits and get them over to the right lender. Know what to look for in a viewing. That's property condition, things like that, which we spoke about last week. And then have your team together for success. That is, have, I think, us as a mortgage lender, contractor, home inspector, pest inspection, closing attorney, all these things that's your team so that that you get consistent results from everyone. So very important there. So anyway, questions, always reach out to me. A good part of my day, I mean, I know I get several questions every single day. Realtors, of course, from buyers, clients, but sometimes attorneys. Hey, this other lender's saying this. Is that right? How do we handle this? So we welcome any VA questions at all times. If I don't know the answer, I have experts on my team, and then even we have product specialists within our company, and we can get the answers right away. And it's sometimes you have to actually go to VA, and we're happy to do that. Make a call to VA or put in an email request to get that answer. So the next week we're going to discuss outside the box properties, and this is an area that we've saved right many scenarios, especially like the farm residences. I've written articles on this in the past and would get a lot of people, and lenders will often put extra guidelines on top of VA guidelines. For instance, most think that VA has a cap of 5 acres or 10 acres. And the only reason that is just lenders put that cap on there. So there's actually no limit. So you can have even farm residences. Now, you can't give commercial value to certain buildings. Like if you have a $1 million barn there, commercial value, that's not going to be counted. It's going to be counted like a residential barn because it's a residential loan. But you can have excess acreage and all that. So farm residences, that's a really cool thing where you can borrow potentially 100% of the purchase price to buy such a thing. That's amazing, and most don't know you can do that. Manufactured homes, again, potentially no down payment on that, and that's we can lend on double wides, not single wides. For condos, they must be approved by VA, and so that's very important. VA does have a page on their site that has all the eligible condos. An escrow holdback for VA appraiser required repairs. And we talked about that last week in detail, where, if an appraiser comes back and says, hey, here's the value, et cetera, but hey, these things need to be done, fixed on the house to be able to meet VA guidelines. Okay, so big things need to be going to be taken care of. Hopefully everything is, but let's say that it's something minor that can be done very quickly and just the seller won't do these repairs. Then we do have, on a case by case, the ability to do an escrow holdback, where funds can be provided by either the buyer or the seller, and it's held by the attorney until the work is done. We verify the appraiser's come back out there and said, yep, all good. And then we verify everything's done, and then give the attorney instructions to release those funds. And any excess would be sent back to whoever provided that escrow holdback. So that's something that can save a lot of headaches on a property that's just causing issues. And that is our presentation for today. And I appreciate your time. Feel free to reach out again with any questions, scenarios, and clients. And I hope you have a very blessed day.